All right, guys, today is all about the end game for those of you who want to cash in on your silver stacking. And before we get into that, I'm on Wall Street Silver and it looks like somebody is prepping themselves. Check this out. We had a party about 6 to 8 months ago. After the party, I couldn't find this money. My camera showed me nothing, so I just chalked it up as a loss. This would be a huge loss here. We're packing up our house to move, and I found this today. I'm spending it all on silver. So look at all this cash that they're going to be spending on silver. Now, this brings me to today's point. You know, even though we're seeing gold or silver actually broke above its $25 resistance level for spot, it's still not, really moving high. But when would we expect to see that move to be made? And when should we start to, for those of you who are more shorter term in your stacking, when would you guys be looking to cash in your chips? And I think we are starting to get an idea of when that would be. Just recently today, the IMF released this. Now, this is very important. It will make sense shortly, but the latest World Economic Outlook growth projections. And here you have a column for 2020, another one for 2021, and another one for 2022. And you have the advanced economies here underneath world output. Generally, we should have a 6% growth in GDP for 2021, but then it's going to come down in 2022. Now, that is important. That will be saved by the end of this video. But let's talk about what we're seeing as far as 2021 and 2022 are concerned. The US is expected to be about 6.4% growth in 2021, and then it'll drop to 3.5. So it looks like their estimations, and this is why, the Fed is expecting to see really hot inflation coming in by the end of 2021 and possibly in the beginning of 2022. But some are actually expecting that to normalize in 2022, but we'll see. The euro area will actually grow less than the US, which makes sense. Those guys have been struggling mightily with the 2020 issue, shall we say. Currently, right now, the Czech Republic is battling with it. I took a look at their version of what you could say is like the ISM. And a lot of those countries, France, Italy, and Spain, March, they rebounded pretty nicely. Germany's doing okay, but the Czech Republic, man, they are struggling right now. And also, take a look at the emerging and developing Asian region. Take a look at China, guys, 8.4% growth. And then in 2022, 5.6%. And remember, they're not too far off from the US as far as GDP is concerned. So these guys obviously will be the one to watch for the 2020s, as people are already expecting and projecting that they will be the largest economy before this decade ends. And underneath of them, take a look at India. India is doing fantastic as well, though the amount of GDP they have is still in the single digits, in the trillions. So they haven't hit that double digit territory yet. But why are we seeing projections lessened in 2022? Well, there are a few reasons why. A lot of things tend to be multivariate, but let's talk about one thing that will impact silver prices and gold prices for those of you who are stacking and for those of you who are looking to cash in sooner rather than later. Check this out. Fed's Kaplan said he expects an interest rate hike in 2022. Now, this is key because you will start to see GDP growth possibly lessen because of a raising of rates. And that would impact those emerging economies pretty significantly, especially those who have dollar-denominated debt. As dollars become fewer and fewer to come by, they need those dollars to pay back their dollar-denominated debt. But here is what the Dallas Fed president had to say. He will likely favor an interest rate hike or an interest rate increase before the end of 2022. Though he doesn't see inflation becoming a problem anytime soon, the central bank official said he expects the economy to progress enough to allow for the Fed to start pulling back on the high levels of accommodation as provided since the 2020 issue. Kaplan admitted he was one of the 22 quote-unquote dots revealed after last week's Fed Open Market Committee, FOMC meeting that pointed to an increase next year. The Fed each quarter releases a dot plot of individual members' expectations of where rates will be heading over the next 3 years and beyond. Now, guys, we have seen financials rally pretty significantly, the financial sector within the U.S. economy. Why is that important? Well, one of the ways that the financial sector, we're talking, guys like Goldman Sachs and others, one of the ways that they make money is when rates rise. And they've been, and there many of their stocks, of those stocks have been rising and rallying for the last couple of months. And usually the market is about, a year or so ahead of when these things tend to, happen and hit the, kind of hit the economy. So a lot of people who are investors within the financial space are likely anticipating a rate hike as well. That's why they're in, or they've been rallying within the financial sector as well. So yeah, when rates raise, essentially all of these institutions who are lenders basically make money without having to do anything, because many of them will not just be lending fixed, but they also lend variable rate bonds, for example. So that is something that I've been noticing in these past couple of months, which could also be forecasting or the anticipation of rates rising. So why is that important for the gold and silver space? Well, that will let us know when the economy will basically, or I should say the Fed will basically say, all right, gold and silver prices, you had your run, but now you're going to be faced with interest rate hikes. You're going to be battling the US 10-year Treasury yield, and good luck, let the chips fall where they may. So guys, that's important. For me, I will be looking to see if prices have topped by then. And I would be, lightening up on my positions a little bit. I would anticipate that before then we'll see prices rise in gold and silver. And then once those interest rates rise, I would then be looking to sell a little bit. Now, I would actually be doing it a little bit before that interest rate hike actually happens, because likely once it does happen, it might be too late and we'll start to see prices drop. Now, again, my long-term goal is to essentially get back into gold and silver when prices drop and hit their plateau, maybe sometime in the middle of this decade. Because for me, it's a long-term strategy, though I do like to take advantage of those hikes in prices. So guys, let me know what you think in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.